Okay, so asset management. This ought to be relatively short. Coordinate and or monitor the movement of equipment and assets within the organization. So inventory is an asset, but so is everything else we buy. Desks, chairs, computers. So organizational policy for asset classification, grouping resources under appropriate asset categories. So current assets are short-term resources such as cash, inventory, and accounts receivable. That's current assets versus current liabilities. Intangible assets are things like the PACCAR name, what customers think of it, goodwill or reputation, have value but cannot be physically seen or touched. That's an intangible asset. An investment asset is just what it sounds like: stocks, bonds, cash. And deferred cost, incurring the expenditure that has a future benefit in excess of 1 year that is capitalized. So when we capitalize stuff, we put it on the balance sheet as opposed to the income statement when we expense it. And the reason we do that is we want to count it as an asset. And what's on the balance sheet is an asset. So fixed assets, assets that last more than a year and are material to shareholder value, such as PP&E, plant, property, and equipment. Also other categories. So property or real property, assets that stay in place if the facility is sold. So the real property of this building would be the actual building itself. Plant and equipment move with the company. So all the furniture in the building is plant and equipment, along with all of the stuff that we have in our plants. The plant itself is property. Other intangible assets are licenses. So there's also intangible assets in the plants and or licenses. So, whoops. Fixed asset classifications: property, land and rights, ground improvements, utility systems, building structures, plant, shelving, conveyor, picking systems, other equipment that can be moved out of the plant if necessary. Equipment is delivery vehicles, forklifts, computers, barcode readers, office equipment. So there's a kind of a differentiation between plant and equipment. So plant is usually kind of the stuff that's bolted down in the plant. Takes some effort to move. The equipment, on the other hand, does not take a lot of effort to move. Then you got software licenses, you got trademarks, literary works, customer lists, patented technology, all that stuff's assets because it's worth something, but a lot of it's intangible assets. You can't touch it. So how supply management links to the balance sheet. So the balance sheet is all about assets and liabilities and owner's equity. So on the assets, short-term cash and receivables, inventories, procurement is involved with order cycle time, order completion rate, invoice accuracy, inventory policies, service levels, what kind of safety stock are you going to keep? And then the long-term assets, plant, property, and equipment. That's distribution facilities, transportation equipment, company cars, that type of thing. And then on the liability side, because it's a balance sheet, you have your current liabilities, which are your short-term liabilities. And that is involved with procurement policies, financing options for inventory, financing for plant and equipment. Some of that is involved in debt. Usually purchasing isn't the one that's going to dictate that, though. It'll be finance. But how much stock you keep on hand and your bills to your suppliers would be your current liabilities. Tax policy on assets. In the US, certain assets qualify for IRS Section 179 deductions for depreciation. So each year that the depreciation is deducted reduces the asset's adjusted cost basis. So this is why you have faster or slower depreciation, because the faster you depreciate in those early years, you pay less tax because your income is lower, but you really didn't do anything. Anyway, it's in 1F2 if you want to look at depreciation again. Physical tracking systems, so asset tags look like these kind of things, are used to track most capital assets, which are stuff that's capitalized on the balance sheet. It's not inventory, but it's mostly for us, it's equipment that we own at the supplier, molds and tools and stuff. And tags can be barcoded or RFID tagged. Mostly they're going to be barcoded like this. Serial numbers should be added. Here's a serial number. Here's a serial number. And asset tracking software is also available for purchase. And I'm not sure if we use asset tracking software, if we probably use Excel or Access or something like that. Other tracking methods include optical character reading, OCR, machine vision, magnetic stripe, surface acoustic wave, all these other kind of fancy things that this does the same thing. Financial tracking systems for capital equipment used by an organization for its production potential that costs more than a predetermined threshold value, which is depreciated over time. So for capital equipment, if we're going to capitalize something at PACCAR, it used to be $10,000, but I think it's $20,000. It has to be over $20,000 and have to have at least a 3-year life. So asset tags need to be affixed to the equipment, and it should be tracked in a database. And it is somehow with us. I think maybe it's Windchill now that we track all this stuff in. Software tracking systems will depreciate the value of the asset. Yeah, I mean, they do all kinds of stuff for you, but accountants can do that too. Software can be anything from a spreadsheet to a module and ERP system, and they're all available. And I'm pretty sure it's Windchill that we keep track of all our tools and assets nowadays. Internal distribution, moving of materials, parts, and subassemblies within the organization. Internal transportation relates to the infrastructure in an organization that allows materials to be moved. So you're talking, especially at some place like PPD, pallet jacks, forklifts. We have these things in the plants too. Types of equipment and assets, they vary from company to company, but I don't know. I think we probably own the 2 planes. I know we have a couple of cars downstairs. We don't own any trains. I think we lease all the copiers. I don't think anybody owns copiers anymore. Computers we buy. We have all kinds of machinery at the plant. We have finished goods. We don't really hold finished goods. We just ship that stuff off to the dealer as soon as it's done. Asset management. Process of tracking fixed assets that a company owns and is listed on its balance sheet in order to maintain accurate financial records. So a lot of this is a SOX requirement. You got to maintain accurate financial records. So inventory management, different for capital assets than from finished goods or component parts inventory. So you have to have asset tags and everything for capital assets so you know where they're at, because they'll usually be around for years. Usually manufacturing, engineering, IT, and finance are all stakeholders for tracking capital assets. And it's our indirect group on floor 2 that helps do this, but it's mostly the MEs of division that track this stuff. And they track it because the finance guys will get on them if they don't. And the finance guys rely on IT to make sure they know where this stuff is and how much it's worth. So PACCAR's assets at suppliers, these are tools usually. Applies to all PACCAR owned tooling at our suppliers. Capitalized if over 10,000, I think that's now 20,000 in value. Carried on a balance sheet and depreciated. Serialized asset tags affixed to all PACCAR assets, whether they're expensed or capitalized. And I think we've changed the rules that Stuff below 10,000 now we don't even tag that stuff because we don't care. It's usually like cutting dies and stuff like that that we don't want to be digging up and hauling around. Just throw them away, get new ones. Tracked in a database with pictures, location, and description. These come from the PPAP process and the tooling PO. And tooling condition survey sent out annually to suppliers. And when you're working with your suppliers, you got to alert them that they need to fill this tooling survey out because it comes from the manufacturing engineers and they use it to build the maintenance budget for the following year. So if you don't reply, there's no money that gets in for repairing the tool that you're holding for us. Supplier doesn't respond, money's allocated to tooling. So then the tooling breaks and they need money and there's no money in the budget and it gets to be a disaster. So suppliers need to respond to that survey. Supplier investment program, PACCAR pays for the machinery in order to get a discounted price on the parts. And asset recovery programs. After the asset has exceeded its usefulness, it's been fully depreciated, and then you try to recover something. Now, some of these assets, you fully depreciate them 20 years ago and you're still using them. But most of them, once they're fully depreciated, then you try to recover what residual value you can. Primary objective of asset recovery is to increase the company's cash position by optimizing the return on the asset, getting something for the asset after it's been depreciated. Applies mostly to a company's surplus equipment. And steps for asset recovery: identify and classify the asset, determine which assets are past their useful life, and then determine the asset's resale value. How much is the asset worth in its present state? And just because it's old and it's big does not mean it's worth anything. It might only be worth the scrap value. And review security policies for removing the company information, clear any memory. And with a lot of stuff these days that has memory chips, you got to make sure those are all wiped clear. And review environmental disposal responsibilities. Does the thing got oil in it, or you can't just throw it in the trash. Equipment lending. Equipment may be loaned to other companies for a variety of reasons, such as business relationship or disaster relief. And we do this on our, what is this called? Supplier investment program. Asset disposal, disposing of assets that are no longer useful in the last step of the process. So determine the options available to maximize disposal. Some options for assets that have exceeded their useful life are recycling, remanufacturing, reemploy it elsewhere. If an asset cannot be reused in any of the above, a surplus disposal must occur, which means you're throwing it away. So the marketplace for disposal: most cost-effective way of disposing of inventory is to sell it back to the supplier. Always, even with the restocking fee, that's where you're going to get the most money. So if the supplier doesn't want it, and usually they don't because we buy a lot of custom parts and they can't resell them to anybody else, the third-party brokers will sell inventory and assets for a fee, but the broker does not take possession of the items. They'll find a buyer for them, and usually around 2 to 10 cents on the dollar. So you don't get much, and most of this is electronic stuff. Caps, resistors, stuff that goes on a circuit board. A dealer, on the other hand, works similar to the broker, but they will buy the inventory from us and then resell it and pocket the difference. But you're still only going to get like 2 cents on the dollar from these guys, and they're not interested in your broken old furniture. They want electronic parts. And then the third-party specialist: many companies will contract with a third party to handle maintenance and spare parts. And the third party will own the inventory and sell it on the open market if it needs to. Asset quality management: warehouse equipment needs to be regularly maintained, follow manufacturer standards, maintain the equipment on regular schedules. You got to have preventive maintenance checks and services, and computerized maintenance management systems. They got software for everything. Schedule regulatory inspections and replace assets as they become weak or outdated. All right. Which of the following asset tracking methods would be least effective in tracking warehouse capital assets? Oh, This isn't, it's like an interesting one. What do you think here? Whoops.
I was leaning towards D, card index system.
Yeah, I mean, that's the way they used to do it back in the 60s. But I'm
Yeah.
pretty sure nobody's doing it that way anymore. Yep. All right. Next one. Primary objective of asset recovery is to, hmm, what do you like here?
B.
Yeah, I'd go with D. Yeah, it is. Optimize the return on the asset. Very broad statement. All right. There's 8 questions out there. So why don't you get going on them and just raise your hand when you get done doing them. The latest we'll go over is 354. Two F9. All right, you guys are getting fast. Oh, Aaron, are you done?
Yes. Yep. Just put my hand down.
Okay. Henry, you done?
Yeah, I'm done. These
Okay.
questions are like shorter. I think that's why we got it faster.
All right. All right. Let's go look at some answers here. Number 1 is delta. First step in an asset recovery program is to identify and classify the asset. The second step is to determine the asset's resale value. So you had 2 of them that started with 2. Then you just had to figure out which one was the second step. 2 is Bravo. Forklifts will move with Acme if it changes location, and that means it's plant and equipment. 3 is Bravo. A dealer will purchase the equipment from Acme and then resell it at markup. But you say, well, why wouldn't you sell it back to the supplier? The equipment is more than a year old, and the supply base is very unlikely to take it back, even at a high restocking fee. If you got stuff that's over a year, they're just going to say, yeah, especially office furniture, they're going to say, no, it's yours, man. 4 is Charlie. Looking for an answer that does not something here with others. No, remediation is used in an audit procedure. 5 is alpha. Because Todd has obviously already classified the asset as obsolete and determined a value for it. Next step would be to remove any company information. 6 is delta. Question 7 was asking for physical tracking methods, and the ERP would be software. 7 is Charlie. Fixed assets are accounted for on the company's balance sheet and must have a useful life of at least a year. And 8 is alpha. There is no asset category for temporary assets. All right, any questions? If not, talk to you guys tomorrow.
Sounds
Great.
good. Thank you, Rick.
Yeah.